Testing, testing. Started early today because non-farm payroll is at 8:30, and I just wanted to capture that in the recording. So they have, I want to see this taken still. Um, Check it daily real quick. So the daily ended up getting a close above the midpoint of this inversion. So it still seems bullish. They left the buy side here. They also generated sell side all night right here, and then the equal lows right here. And those equal lows formed right at this yesterday. There are these two little wicks here on the 1 minute. I had this annotated as sell side because I was looking at it on a 5 second chart, and those looks like really clean equal lows. And I was looking for that 10 o'clock reversal for either continuation, like discount. Really, that's what I was looking for. But they they ended up leaving that, and even during the regular trading hours, it left it there, and then the overnight also left that low, and this one. So it's just all stacked up there. Um, they'll probably take everything. I doubt that they're going to leave any liquidity intact. Um, my guess is honestly, I'm guessing they will run out hot like internal highs and then snap it all the way back down to sell side. And then maybe during the regular trading hours, it'll reverse up to the daily buy side at 30,094. That's my guess. So, but I thought it'd be fun to capture it. They left that there. So far, this is playing out how I thought. They took a minor sell side first, left that intact. I think if we're going to close higher on the day, this will come back down and take all the sell side. And then regular trading hours will send us back up to the buy side. If it's going to close bearish on the day, I think it will run the buy side first and then start to make a move back down to the sell side. left buy side right there. So I'm going to get rid of this 5 minute wick because there is a 15 minute for value gap, bearish for value gap. Um, and it is overlapped with or anchored to the midpoint of that monthly level I talked about the other day. This monthly candle of June, I have that entire range graded, and then at the midpoint is that purple dashed line, and then the octants and upper quadrant. Would be buy side right here. It's tipped this high, and it's at the midpoint of the 15-minute inefficiency. So it'd be interesting if it left that and then came back down, or maybe just took this minor. Tips the minor there. Yeah, yes at the high. Let's see. Yes has sell side still. Took out this buy side. Alright, so there's the buy side taken. Now we're into the electronic trading hours, opening gap from the fourth. That was Wednesday's uh, gap. Get rid of the background. Just keep those black lines because it makes it a little cleaner. That level is right at 29,800 even. The high, that 15-minute, that monthly midpoint, and then the midpoint of that gap is all stacked at 29,800 even. So it's definitely a key level. Check out the buy side. There's an FOMC member speaking at 10 o'clock today. Um, those are always labeled low impact, but sometimes that can cause high resistance. But I really don't think that's going to be a problem today because the non-farm news, I think, will completely overshadow that and it'll want to run liquidity. I just have it written down. So if we continue this, I feel really confident in this low getting taken during market open. If we keep this up, um, I think it makes a lot of sense to come down and take this out at a bare minimum. And there is a lot of sell side stacked here. This is a really weird gap. The other day, when the regular trading hours closed at 4:14, 4:15, um, there was this really random gap in price, which is strange to see. It usually doesn't do something like that at that time. So I just had it annotated and it was used. Hmm. Probably should have left that wick there, but I'll put it back. Looking at this 15-minute this range that we're in. We're now trading into a premium, taking out minor buy side. Mm. Um, I think this is a breaker. I'm not the best on breakers, but low, high, and then broke back down. I believe that's a breaker. Um, Trading into the high of that right now. So if I were to measure this range, I'm just gonna make these really, really atrociously obvious because the chart's messy. Um, but above this yellow line, it is premium, and we are trading up into that premium area and taking minor buy side, and it left the sell side here. So I think that sets up nicely for a market open for it to come back down and take this out. Um, I think really high odds of taking that out. And it could come and even take that potentially. And maybe, I don't know, it could leave that for next week. I still am really confident that it'll tip these highs before any significant move lower. Because go and get rid of this range now. Go to the 60-minute. Um, that is just, there's a lot of pooled liquidity here. And I think it would just make sense to come up above that before any significant move lower. Been contemplating getting rid of the horizontal and vertical line that's over my mouse. I I don't know. I like to use it. It's obviously useful, that horizontal line. The vertical one not so much. But my charts are so busy. I kind of like the idea of just not having that. It just feels easier to look at without that line moving around constantly, but it'd be harder to tell where price is relative to levels that are far away. That horizontal line helps just see it. Hmm. I like having these minor buy side pools labeled like this because whenever you see it start just wicking over liquidity, that's usually a good indication of it's just sweeping to come back down. Whereas if bodies are closing above a liquidity pool, then context is obviously important, but we we've taken a lot of buy side here. So having the minor buy side label, whenever we get to one, like this one, after taking all this and the context that we're in a premium and their sell side, it's nice to be able to see when it starts just wicking and not actually closing above. As soon as it started only wicking above it like that, we're getting a pretty significant pullback into the range. I'll make it a fun color. Orange. I wish there was a way to just have the mouse without the lines going across the chart like this. And then if I wanted the line to pop up, I could just hold the mouse button or hold some sort of button to just pop it up momentarily if I want to, measure some level or whatever. So I do feel like the chart looks a lot cleaner whenever these lines aren't moving across the whole thing as my mouse is moving. I think this is looking really interesting to come all the way back down to here. And it might start that run before 9:30. I mean, it could just keep going all the way up until 9:30. ES didn't move significantly above that wick. blue or something so I can see them easier. So this would be, ICT just talked about implied dealing ranges. If I think this is the high and it's going here, then this is a implied dealing range or an unfulfilled dealing range. Um, this electronic trading hours gap is really, it's a very important level because there's so many levels overlapping it. I'm going to go ahead and get rid of that 15 minute because we have enough in here. Went up to that monthly midpoint there. There's just a lot anchored to this level. So this would be equilibrium of the move. And in the video I watched last night, whenever it gets to this area, you would want to see an acceleration and it forms some sort of gap that doesn't get filled in. And then that would be a measuring gap down to this low. It's tempting to get in here short. The idea that it's just going to be in a sell program now to take out all these lows, people trying to buy the news. This inefficiency is over top of this upper quadrant of the implied dealing range. So it needs to stay below that midpoint, and then that would have been a nice entry. See how I had it right over top the low of this gap. We closed below it, left it. So it should use the lower portion of it to send price lower. We are trading into this wick. Trading at that octant, that first octant there. That's